Question 1. What is the primary purpose of home insurance? A. To provide financial protection against all potential risks to the property. B. To cover legal liabilities incurred by the homeowner. C. To indemnify the policyholder for losses to their dwelling and personal property. D. To ensure the homeowner receives cash payments regardless of the type of loss incurred. Answer: C. To indemnify the policyholder for losses to their dwelling and personal property. Explanation: the primary purpose of home insurance is to provide indemnification to the policyholder for losses incurred to their dwelling and personal property due to perils like fire, theft, or vandalism. Indemnity and insurance is the principle that ensures the insured is restored to their financial position prior to the loss, not profiting from the event. Option is incorrect because while home insurance covers many risks, it does not cover all potential risks. E.g., natural disasters like floods may require separate coverage. Option B is partially correct, but limited. While legal liabilities are covered under personal liability coverage, it is not the primary purpose. Option D is misleading as home insurance does not guarantee cash payments for all types of losses. Payouts depend on the policy terms and conditions. Question 2. John recently purchased a home insurance policy that includes water backup coverage. If he experiences water damage due to a sewer backup, which of the following statements is true regarding his claim? A. The claim will be denied because water damage is excluded under standard home insurance policies. B. The claim can be paid out if the water backup coverage was selected as an endorsement. C. The claim will be paid out automatically regardless of the cause of the backup. D. The claim will be paid only if John can prove negligence on the part of the municipal sewer system. Answer: B. The claim can be paid out if the water backup coverage was selected as an endorsement. Explanation: water backup coverage is an optional endorsement that must be included in a homeowner's policy for water damage caused by sewer backups to be covered. Without this endorsement, standard home insurance policies generally exclude damage caused by water backup or overflow. Therefore, if John selected this endorsement, he can file a claim for damages. Option A is incorrect because standard policies do not cover sewer backups unless specifically endorsed. Option C is misleading. Coverage is not automatic and is contingent upon the endorsement being in place. Option D is incorrect because the insured does not have to prove negligence to have their claim honored. The endorsement activates coverage regardless of the cause. Question 3, scenario-based. Maria has a homeowner's insurance policy with a $1,000 deductible. A severe storm causes damage to her roof, resulting in a $15,000 claim for repairs. After assessing the damage, her insurance adjuster confirms the claim amount. What amount will Maria receive from her insurance company after the deductible is applied? A. $14,000. B. $15,000. C. $1,000. D. $13,000. Answer A. $14,000. Explanation: in this scenario, Maria's insurance claim amount is $15,000. However, her policy includes a $1,000 deductible, which is the amount she must pay out of pocket before her insurance coverage kicks in. The insurance payout is calculated by subtracting the deductible from the total claim amount. Insurance pay equals claim amount. Deductible equals $15,000. $1,000 equals $14,000. Thus, Maria will receive $14,000 from her insurance company. Option B is incorrect as it does not account for the deductible. Option C represents the deductible amount, not the payout. Option D is also incorrect because it mistakenly deducts more than the specified deductible. Understanding how deductibles work is crucial for evaluating the financial implications of a claim on a homeowner's policy. Question 4. Which of the following coverages would typically protect a homeowner against loss from a fire that destroys their garage? A. Personal property coverage. B. Dwelling coverage. C. Loss of use coverage. D. Personal liability coverage. Answer: B. Dwelling coverage. Explanation: dwelling coverage specifically insures the physical structure of a home and attached structures, such as a garage, against cover perils like fire. This coverage is a fundamental component of home insurance policies. Option A refers to coverage for personal belongings, not the structure itself. Option C addresses additional living expenses incurred if the home is uninhabitable, not the damage to the garage. Option D protects against legal liabilities arising from injuries or damages to others, which does not apply to property damage claims. Question 5. In South Dakota, what is the maximum time frame an insurance company has to respond to a homeowner's claim once it has been submitted? A. 15 days. B. 30 days. C. 45 days. D. 60 days. Answer: B. 30 days. Explanation: according to South Dakota law, insurance companies are required to acknowledge receipt of a claim and provide a response within 30 days. This time frame ensures timely communication between the insurer and the policyholder, promoting fair claims handling. Options A, C, and D do not reflect the legal requirements established by state regulations. Question 6. Tom has a home insurance policy that includes a replacement cost provision for his personal property. If a fire damages his TV, which originally cost $800 and the current market value is $500, how much will Tom receive for his claim? A. $800, B. $500, C. $300, D. $1,300. Answer: A. $800. Explanation: under replacement cost provision, Tom is entitled to receive the amount needed to replace the damaged item with a new one of similar kind and quality without factoring in depreciation. Since the original cost of the TV was $800, you would receive that full amount to replace it, regardless of its current market value. Option B reflects the depreciated value, which does not apply under a replacement cost policy. Options C and D are incorrect as they do not accurately represent the claim calculation based on replacement cost. Question 7. Sarah is considering adding an endorsement for valuable items to her homeowner's policy. Which of the following items would NOT typically be covered under such an endorsement? A. Artwork valued at $10,000. B. Antique jewelry valued at $5,000. C. A standard refrigerator valued at $1,200. D. A collector's coin set valued at $3,000. Answer: C. A standard refrigerator valued at $1,200. Explanation: endorsements for valuable items, also known as scheduled personal property coverage, specifically cover high-value items such as jewelry, art, and collectibles. A standard refrigerator, while valuable, is considered a household appliance and falls under general personal property coverage, not specialized endorsements for valuable items. Options A, B, and D all refer to items that typically require additional coverage due to their higher value and potential for loss. Question 8. If a homeowner's insurance policy contains an exclusion for mold damage, which of the following scenarios would most likely result in a denied claim? A. Water damage from a burst pipe leading to mold growth. B. Mold growth in the bathroom due to inadequate ventilation. C. Damage from a flood that leads to mold in the basement. D. Mold growth due to flooding caused by a natural disaster. Answer: B. Mold growth in the bathroom due to inadequate ventilation. Explanation: most homeowners' insurance policies exclude coverage for mold damage, especially if it results from a homeowner's failure to maintain their property, such as inadequate ventilation. This scenario presents a preventable condition which insurers often deny claims for. Option A involves water damage from a sudden event, the burst pipe, which may be covered if the water damage is claimed separately. Options C and D involve flooding, which is often excluded from standard home insurance policies unless separate flood insurance is purchased. However, mold damage in these cases is still likely to be excluded due to the nature of the claim. Question 9. Which of the following factors is AST likely to influence the premium amount for a homeowner's insurance policy? A. The homeowner's credit score. B. The property's proximity to a fire station. C. The age and condition of the home. D. The homeowner's employment status. Answer: D. The homeowner's employment status. Explanation: while many factors can influence the premium of a homeowner's insurance policy, the homeowner's employment status is generally not one of them. Insurers focus on factors that directly relate to risk assessment, such as the homeowner's credit score, which reflects financial responsibility, the proximity of the home to a fire station, which affects response times, and the age and condition of the home, which impacts the likelihood of claims. Therefore, option D is the correct answer, as it does not affect the premium calculation. Question 10. When a homeowner receives a notice of cancellation from their insurance company, how long do they typically have to find a new policy before the cancellation takes effect? A. 5 days. B. 10 days. C. 15 days. D. 30 days. Answer: C. 15 days. Explanation: in South Dakota, when a homeowner receives a notice of cancellation, they are generally given a 15-day notice period to secure a new policy before the cancellation takes effect. This provision allows homeowners adequate time to avoid a lapse in coverage. Options A, B, and D are incorrect as they do not align with the standard time frame set by state regulations. Understanding the cancellation process and timeline is crucial for homeowners to maintain continuous insurance coverage. Question 11. Which type of home insurance policy provides the broadest coverage for both the dwelling and personal property? A. HO1, Basic Form. B. HO2, Broad Form. C. HO3, Special Form. D. HO5, Comprehensive Form. Answer: D. HO5, Comprehensive Form. Explanation: the HO5 Comprehensive Form policy offers the most extensive coverage available for both the dwelling and personal property. It covers all perils except those specifically excluded in the policy, ensuring a high level of protection. In contrast, the HO1 is a basic policy with limited coverage. The HO2 covers more perils but is still not as comprehensive as the HO5, and the HO3 provides coverage primarily for the dwelling while personal property is covered on a named peril basis. Question 12. If a policyholder wishes to add additional coverage for an expensive painting, which policy modification should they pursue? A. Endorsement. B. Exclusion. C. Deductible. D. Limitation. Answer: A. Endorsement. Explanation: an endorsement is an addition to a standard insurance policy that modifies its coverage, usually to add specific protections for high-value items like expensive art. This ensures that the painting is covered beyond the limits of the standard policy. Options: B. Exclusion refers to what is not covered. C. Deductible pertains to the amount the policyholder pays out of pocket before coverage kicks in. And D. Limitation refers to a cap on the amount covered, which would not provide the necessary additional protection. Question 13. Megan has a home insurance policy that includes coverage for personal liability. If her guest slips and falls on her property, which of the following would likely be covered? A. Medical bills for the guest. B. Legal fees for Megan's defensive suit. C. Compensation for pain and suffering claimed by the guest. D. All of the above. Answer: D. All of the above. Explanation: personal liability coverage generally protects homeowners against claims of bodily injury or property damage that occur on their premises. This includes covering medical bills for the injured guest, legal fees incurred while defending against any lawsuits, and potential compensation for pain and suffering claims depending on the circumstances. Thus, all options A, B, and C are covered under personal liability provisions. Question 14. Which of the following best describes the principle of indemnity in insurance? A. Coverage for unexpected losses. B. Compensation that restores the insured to their pre-loss financial condition. C. A promise to pay out a claim regardless of circumstances. D. A requirement for policyholders to pay deductibles. Answer: B. Compensation that restores the insured to their pre-loss financial condition. Explanation: the principle of indemnity ensures that an insurance policy compensates the insured for their loss without allowing them to profit from the claim. This means that after a loss, the insured should be in a financial position similar to where they were before the incident occurred. Option A is incorrect as it refers more to coverage types, while option C misrepresents the nature of insurance as it cannot guarantee payment under all circumstances. Option D, while relevant to claims processing, does not define indemnity. Question 15. Which of the following situations is most likely to be covered by a standard homeowner's insurance policy? A. Damage from a flood caused by heavy rains. B. Theft of personal property from an unattended vehicle. C. Damage from a falling tree during a storm. D. Intentional damage caused by the homeowner. Answer: C. Damage from a falling tree during a storm. Explanation: a standard homeowner's insurance policy typically covers damage to the dwelling caused by falling objects, including trees, as long as the tree fell due to a covered peril, such as a storm. Option A refers to flooding, which is generally excluded unless flood insurance is purchased separately. Option B may be excluded if the personal property is not on the insured premises. Option D involves intentional damage, which is never covered under any standard insurance policy. Question 16. Which of the following is a required duty of a homeowner after a loss occurs under a typical homeowner's insurance policy? A. To replace damaged property immediately. B. To notify the insurer of the loss as soon as possible. C. To conduct repairs without the insurer's approval. D. To file a lawsuit against the insurer. Answer: B. To notify the insurer of the loss as soon as possible. Explanation: under typical homeowners insurance policies, policyholders are required to promptly notify their insurer of any losses to facilitate the claims process. This allows the insurer to begin assessing the claim and arranging for any necessary inspections. Options A and C are incorrect, as policyholders should wait for the insurer's guidance before making significant repairs. Option D is also incorrect, as filing a lawsuit is not a required duty following a loss. Question 17. What type of insurance coverage is typically excluded from standard homeowners insurance policies, requiring a separate policy? A. Earthquake coverage. B. Dwelling coverage. C. Personal property coverage. D. Liability coverage. Answer A. Earthquake coverage. Explanation. Standard homeowners insurance policies generally exclude earthquake coverage, as it is considered a significant risk requiring separate coverage due to the potential for extensive damage. Homeowners in areas prone to earthquakes must purchase additional policies to protect against this peril. Options B, C, and D represent core coverages typically included in standard policies. Question 18. If an insurer decides to non-renew a homeowner's policy, how many days' notice must they provide in South Dakota? A. 15 days. B. 30 days. C. 45 days. D. 60 days. Answer B. 30 days. Explanation. In South Dakota, an insurer must provide at least 30 days' notice to a policyholder if they decide to non-renew a homeowner's policy. This requirement allows the policyholder adequate time to secure alternative coverage. Options A, C, and D do not align with the state regulations regarding non-renewal notifications. Question 19. When evaluating a home for insurance purposes, which of the following factors would most likely result in higher premiums? A. A newer roof installed with high-quality materials. B. A central alarm system installed in the home. C. A history of multiple claims filed in the past 5 years. D. A property located in a low-crime area. Answer C. A history of multiple claims filed in the past 5 years. Explanation. Insurance companies assess risk based on claims history. A homeowner with multiple claims in a short period is viewed as a higher risk, which typically results in higher premiums. Options A and B would likely lead to lower premiums due to the reduced risk they represent, while option D would also contribute to lower premiums due to the perceived safety of the area. Question 20. Which of the following is a common exclusion found in many homeowners insurance policies? A. Damage caused by sudden and accidental water leaks. B. Loss of personal property due to theft. C. Damage resulting from mold growth due to negligence. D. Liability for injuries occurring on the insured property. Answer C. Damage resulting from mold growth due to negligence. Explanation. Most homeowners insurance policies exclude coverage for mold damage when it results from negligence, such as failure to maintain proper ventilation or address water leaks promptly. Options A and B generally represent covered perils, while option D refers to liability coverage, which is also typically included in homeowners insurance policies. Understanding these exclusions is essential for homeowners to manage their risks appropriately. Question 21. What is the purpose of an insurance deductible in a homeowner's policy? A. To increase the insurer's premium. B. To reduce the policyholder's premium. C. To cover the policyholder's total loss. D. To allow the policyholder to receive full claim amounts. Answer B. To reduce the policyholder's premium. Explanation. A deductible is the amount a policyholder must pay out of pocket before the insurance coverage kicks in. By agreeing to a higher deductible, the policyholder lowers their premium as they assume more financial responsibility for smaller claims. This helps reduce the frequency of small claims and lowers the cost of coverage. Question 22. Which of the following would typically not be covered by a standard homeowner's insurance policy? A. Fire damage to the dwelling. B. Theft of personal property. C. Flood damage. D. Liability for injury to, Answer C. Flood damage. Explanation. Flood damage is typically excluded from standard homeowners insurance policies. Homeowners must purchase separate flood insurance to cover damages from flooding. Options A, B, and D are generally covered perils in a standard policy. Question 23. What coverage is designed to pay for repairs to your home if a covered peril damages your dwelling? A. Personal property coverage. B. Liability coverage. C. Dwelling coverage. D. Loss of use coverage. Answer C. Dwelling coverage. Explanation. Dwelling coverage protects the physical structure of your home from damage caused by covered perils such as fire, windstorms, and vandalism. Personal property coverage protects belongings. Liability covers legal responsibility, and loss of use covers additional living expenses when the home is uninhabitable. Question 24. If a policyholder's home is deemed uninhabitable due to a covered peril, which coverage will pay for temporary living expenses? A. Loss of use coverage. B. Liability coverage. C. Dwelling coverage. D. Medical payments coverage. Answer A. Loss of use coverage. Explanation. Loss of use coverage pays for additional living expenses such as hotel bills and restaurant meals when a policyholder's home is uninhabitable due to a covered peril. This ensures the homeowner can maintain their standard of living during repairs. Question 25. Which factor is most likely to reduce the cost of a homeowner's insurance policy? A. Living in a high crime area. B. Filing multiple claims in recent years. C. Installing a central alarm system. D. Choosing a low deductible. Answer C. Installing a central alarm system. Explanation. Installing security systems, such as a central alarm, reduces the likelihood of theft and other risks, leading to lower insurance premiums. Conversely, living in a high crime area or filing multiple claims increases premiums. A lower deductible results in higher premiums because the insurer takes on more risk. Question 26. Which of the following perils is most likely to be excluded from a standard homeowner's insurance policy unless added through an endorsement? A. Lightning strikes. B. Vandalism. C. Earthquakes. D. Theft. Answer C. Earthquakes. Explanation. Earthquakes are generally excluded from standard homeowners insurance policies and require a separate endorsement or policy for coverage. Lightning strikes, vandalism, and theft are typically covered perils in a standard policy. Question 27. Under a standard homeowners insurance policy, how is the personal property coverage typically calculated? A. It's based on the replacement cost of the property. B. It's a set percentage of the dwelling coverage amount. C. It's the same as the liability coverage limit. D is a flat amount chosen by the policyholder. Answer B. It's a set percentage of the dwelling coverage amount. Explanation. Personal property coverage is usually set as a percentage of the dwelling coverage, often ranging from 50% to 70%. This coverage helps protect belongings like furniture, clothing, and electronics. Question 20. What type of insurance coverage would a homeowner need to purchase to protect against financial loss from sewer backup? A. Dwelling coverage. B. Flood insurance. C. Sewer backup coverage. D. Earthquake insurance. Answer C. Sewer backup coverage. Explanation. Sewer backup coverage is a specific add-on that protects against damages resulting from water backing up through sewers or drains. Standard homeowners insurance policies typically do not include this coverage, and flood insurance wouldn't apply in this scenario. Question 29. What is the purpose of the coinsurance clause in a homeowner's insurance policy? A. To limit the amount the insurer will pay on a claim. B. To ensure the homeowner insures the property to a certain percentage of its value. C. To require the homeowner to share the loss equally with the insurer. D. To provide additional coverage for personal property. Answer B. To ensure the homeowner insures the property to a certain percentage of its value. Explanation. The coinsurance clause requires the homeowner to insure their property to a minimum percentage of its value, typically 80%. Failure to meet this requirement may result in reduced claim payments. Question 30. What is an open peril policy in home insurance? A. A policy that covers only specifically named risks. B. A policy that covers all risks unless specifically excluded. C. A policy that excludes coverage for all perils. D. A policy that covers personal liability exclusively. Answer B. A policy that covers all risks unless specifically excluded. Explanation. An open peril policy covers all types of risks except those that are specifically excluded in the policy. This differs from named peril policies, which only cover risks that are specifically listed in the contract.